Welcome into the reaction channel, folks. Few things to talk about and react to in this video here today. Tom Lee went on CNBC honestly, this was about an hour or two ago. So I got to record this piece. I want to go ahead and react to this one on where Tom Lee believes this market's headed from here and why. Looking forward to reacting to that one. Then Dan Niles, Google will have the best AI app in the long term. That should be an interesting one to react to. That's a big statement there. And also Dan Niles is going to share his opinion a little bit about the market. Want to react to that one. Then from there, we're going to get into essentially the stocks. I'm going to show you my entire possible buys watch list for all the stocks. We'll talk about like 2 or 3 stocks that in my opinion are just like great buys right now that you kind of can't miss, at least in my opinion, over this next bit of time. So we'll get into that after I react to these 2 videos. And that'll pretty much be that. By the way, congratulations to everybody out there that's at all-time highs here today. I believe the public count closed at an all-time high here today. Some of my other portfolios as well. So I appreciate y'all for being here. One thing only I need from you guys, if you could please just hit the like button on this video. If you could just hit that thumbs up button, that would mean the world to me. Thank you for everybody that's already done that. I didn't even need to tell you. And for those of you that aren't on the wave yet, that's what I always need you guys to do, okay? If you want to be subscribed to the channel, we're almost at 110,000 subscribers here on the channel. So I appreciate each and every one of you for being here. If you want to see the stocks I'm buying and selling each week in my Patreon, that will be linked in, I'll have that as a pinned comment down there, the second pinned comment down there. If you want to join my Patreon to see the stocks I'm buying and selling each week and all that good stuff. And other than that, for the first pinned comment down there, I'll have the application if you're looking to apply to join a private stock group, apply to use 1000xstocks.com, the premium software I use on a daily basis, all that good stuff. That will be the first pinned comment down there, okay? And that's my entire library of premium courses access in private Discord chat as well, okay? Alrighty, so let's go ahead, let's react to Tom Lee, and then we shall go from there.
What do you make? I mean, how much does the Fed really matter to the equity markets right now?
The Fed still matters a lot because they are the most powerful institution in the world. And it matters because monetary policy relatively tight has kept the ISM below 50 for 31 months. And so corporate America has operated with a bit of caution, keeping the car in low gear because they didn't know where inflation was going to be and they didn't know where monetary policy was. So I think when the Fed begins to ease, it's not just a move in interest rates, but it's a green light for corporations to get more confident. And as you know, the ISM moving above 50 does not only revive economic activity, it probably also rejuvenates the labor market, which has been sluggish for what looks like more than 12 months.
So does that mean if the Fed stays dovish or keeps cutting, that there's other newer legs to this pretty remarkable stock rally?
Yes, and I might even say that I think that we could have growth recover without inflationary pressures. I think reflexively, people the last few years think growth.
Hold on, before he goes further here, let's read through what is his note here. Fed made a proper pivot to focus rightly on addressing the employment risks. The tariff-related cost increases are less likely to fuel inflation if labor market remains soft, so the Fed can resume cutting. Bond market sees more cuts than Fed had previously, which means the Fed was behind. Okay.
Picking up means there's automatic inflation. That has not been the case for 25 years. But I think if companies begin to expand, plus the fact that we know AI is driving productivity gains, and that's really a big tailwind for businesses. And then we know that there's initiatives around Wall Street boosting productivity because they're going to build on the blockchain. I think there's a path for growth to be stronger next year without a pickup in inflation. That's going to be very good for profits and for equities.
Yeah, and listen, we've talked about many times, Tom, and I know you've talked about Scott and others as well. You've been long, you've been strong, you've been correct. But is there, at some point, does this market take a breather? It's getting, listen, as a 401k holder, I like it. But as a TV analyst who's been doing this for almost 30 years, I'm starting to worry about it a little bit.
Yes, I mean, a pullback is going to be inevitable. But from a timing perspective, sentiment still remains staunchly negative. So, I think that the gold standard is the AAII, net bulls, less bears. That's been 6 consecutive weeks where it's negative. that's never really marked a market top. I mean, that has to flip positive and sustain for several weeks. So I think if we're going to say between now and year end, could the market pull back? I'd say it's possible, but to me, it's probably from higher levels. I think there was a lot of skepticism about even yesterday's FOMC. I had a lot of clients tell us they thought the stock market would sell off because 25 was priced in. But because almost everyone told me that, that was the consensus view. I think people were cautious into yesterday. And that's why we're seeing the groups that should rally big, like the small caps and the cryptos and the financials and even the Mag 7.
Okay, before we go further here, in regards to Tom Lee's comments there on the market, having a pullback eventually here, but maybe from a higher level, that could very much well happen, right? Dan Niles, we're going to react to a Dan Niles clip in here in just a moment. I think I reacted to Dan Niles clip, what was it, last week, I believe, and Dan Niles was basically talking about a rally all the way to Thanksgiving, and then we'll see what happens after that, essentially, right? And so now the important thing Tom Lee brought up there was AI investor sentiment, but I think he might have missed the biggest part of this whole story, okay? The biggest part of this whole story in regards to AI investor sentiment, in my opinion, is that sentiment survey has been in the dumpers since February. Since February. It's been overwhelmingly bearish for the longest time, for almost this entire year. Almost this entire year. And I've been waiting for the flip. And one of the reasons that it's really hard for me to want to hedge against this market, right? And I've done a few hedges here and there. I did some hedges at the beginning of the year, which obviously turned out great. I did the Duolingo hedge against Little Dingo, a while back. Made a bunch of money on that. I think I made like $19,000 in like a week or two on that one, right? I think it was like a week. And so there's a little hedging, but I haven't really hedged that much, right? I haven't come in with those $50,000 or $100,000 hedges. And one of the reasons is the AI investor sentiment has just been in such a bad place. I want to see people get really bowled up. I want to see the AI investor sentiment go way positive. I want everybody to say the stocks are going on the moon. It's just going to be up. I want everybody to go Tom Lee-ish, right? And when I say everybody, I'm not talking about retail. I'm talking about big money. I'm talking about Wall Streeters, hedge fund managers, all these Wall Streeters that go on CNBC and Bloomberg. I want to hear them all go Tom Lee. I want to hear them all talk about why the market's going to boom in 26, why it's going to be an amazing year, why we're going to have double digits gains again. If they can all do that, then we can say it's time to come in with the big dog hedges. Let's go. But I need that to happen first. I need that to play out first. And so that's why you haven't seen me be that incentivized to come through with the big hedges. Like I got cash around, that's a hedge, but to come through and hedge against $50,000 or $100,000 worth of stocks or $250,000 or something like that, like I just can't do it at the moment because people still aren't bullish enough. It's frustrating.
Even get a record high for the Russell 2000, about, 75, 80 minutes left to go. We'll see what happens. Tom Lee, we're going to let you go, but always appreciate you coming on, Tom. Thank you.
Thank you.
All right, you're welcome. Let's get out of Kate Rogers.
So as far as those comments there by Tom Lee, that was about what I would have expected from Tom Lee, right? He sounds bullish. He sounds like, yeah, we're going to eventually have a pullback, but it's going to be from higher levels than this. So might end up being fair, right? And here's the thing. If this is a 2018, we'll see the market start to deteriorate in October. If this is a 2018 and then get really ugly in November and December. If this is not a 2018 and let's say this is more of a 2021 type year, right? Then we can say this market rallies all the way until basically Thanksgiving, which is exactly where Dan Niles has said the market's headed. He said this baby's going higher all the way until Thanksgiving, and then maybe some reality hits. So let's go ahead and hear from Dan Niles in regards to Google, big tech, and his views on the stock market.
Alphabet, actually, because the stock's also up about 4.4%. Don't know if you know any particular reason for that move this morning, but overall, sort of curious to get your take.
Google McDougal, you got me flipping my flapjacks on this stock. It is just making us a fortune right now. It's incredible. Congratulations to anybody out there that holds Google stock. This stock is an animal right now. Absolute animal. So let's go up and pull up Google McDougal. And this one on a 3-month is up 42%. Oh my gosh. I mean, it has just been an animal. Just an absolute animal of a stock. If we back it up until kind of that May time frame, it's up 61%. And from, let's see where it's from the April low I got it close to the April lows because I got on like April 23rd. But from that actual April low, this baby's up 72%. Now let's compare that against like Mr. Softy and like Apple. Those are usually the two stocks you comp most against it. Oh, and we'll throw out Meta as well because Meta is another natural comp. These are kind of the three main comps for Google stock over time: Meta, Apple, Microsoft. Look at Google McDougal's smoked them all. 72% gain since those April lows versus Meta's at 55%, Microsoft's at 43%, and Apple's at 34%. It has just obliterated them. I mean, those are such big gains, it might even be keeping up with NVIDIA and Palantir. Let me pull up NVIDIA and Palantir, which is crazy. And obviously, those aren't natural comps against Google stock, right? The other three are natural comps. I'm just kind of curious about how it comps against those babies. Yeah, I mean, it's not that far off, but it is off of NVIDIA and AMD. Those ones are usually more dramatic movers, right? NVIDIA, since those lows are up, is up 87%, and in AMD, since those lows, is up 92%. So, yeah. As far as AMD, by the way, real quick side note here in regards to AMD, it's still a buy. It's still a buy. That stock's set up so phenomenal for the next several years. The big chip cycle, we're going to start to see those numbers in this next quarter they're going to report, and then things are just going to get really fun from there on.
It wasn't that long ago that everybody was worried about their monopoly in search, particularly being eroded by the likes of ChatGPT.
Yeah, I look at Google for the long term, and I go, I think they're going to have the best app in terms of AI, because if you think about it, what makes an AI app smart? It's data. Well, they've got the most free data in the world because of YouTube. And so if you think about what's the most expensive thing to create, it's video. And so if you look at products they have like BO3 or Nano Banana, which is why the stock is up so much today, because they hit #1 on the US free app store on Apple on Friday, and they passed ChatGPT. That's why the stock's up a lot. You combine that with the fact that it's trading at a market multiple at 25 times. You've got Meta up at 27 times PE, and then you've got the AI names in the 30s, and the stock has a long way to go, especially given that antitrust remedy was way better than any of us ever imagined. They can pay to be the default search engine. They don't have to go ahead and spin off any of their divisions. I mean, they're in great shape when you look out over the next 5 to 10 years, I think.
Yeah, rumors of...
The important thing to understand about Google, this is very important everybody understands this, because I understand not everybody was around to see Google search become the dominant search engine. Like, there's probably a lot of people watching this video right now that all you've ever known is like Google search was like where you went to search something, right? Let me tell you a little story about Ask Jeeves. Let me tell you a little story about Yahoo Search. Okay, those were the big search engines. Those were the first search engines I ever used, was things like that. Ask Jeeves, Yahoo Search, those sorts of things. When I was in school, that's what we used to search stuff. And when I say school, I'm really talking about that was like middle school, high school. I didn't really start using Google search until I got to college, which was like 2008, 2009. And then I started using Google search and I was like, dang, Google search is like legit. Like, this is way better than Yahoo search or anything else I was using previously. And then ever since then, I've always used Google search, right? Now it's 2025, still using Google search. And so the important thing to understand is what you use at first when it comes to one of these new product categories isn't necessarily the thing that's going to be dominant 5 or 10 years from now. So ChatGPT's made a huge name over the past few years, but I'm just telling you, like, Gemini might end up actually being the winner chicken dinner over the long term. Like, we don't know. Like, it might not. Like, maybe ChatGPT is just going to dominate. It's going to become a billion-dollar company. Okay. Or maybe, just maybe, Gemini is actually going to be what dominates and becomes a super successful thing, right? And you got to keep in mind also, marketing matters. You know, ChatGPT just doesn't have a good name. Like, I've always thought about that just from the beginning. Like, what a horrible thing to market a product. And that's fine if it's like college kids and business professionals using a new service at first. But when you're talking about you need billions of users, the masses, you know, you need something that's a more memorable, like easy name to remember. And I just thought ChatGPT is such a horrible name, man. Whereas Gemini is like, boom, it kind of reminds you of Google Gemini. Oh yeah, you know, oh, I use Gemini. Like, I'm going to search something on Gemini. Like, it just sticks with you. It's easy. So, you might not think marketing will matter. It will matter significantly. And, who's got massive user bases? Google does. Google can integrate Gemini into Google search. They've already done it. They can also integrate it into YouTube over time. And there are other products as well, right? And so Gemini just becomes synonymous. Obviously, they have Gmail, they have Android. This, if they want to blow up Gemini over this next 5 years and take the dominant market share, they can do it. As long as their product's great, which so far I've experienced good things with Gemini, and I'm sure it's just going to get better and better, because that's actually what I've been using personally is Gemini. Like, oh my gosh, like if you don't think they could take this market, they could easily take this market over the next 5 years, and we could be talking about Gemini's the dominant player here, just like Android dominates mobile, right? iOS was the first one. Like no one ever knew about smartphones before Steve Jobs went up on that stage in 2007 and showed it off, and all of a sudden everybody's like, whoa. And, Apple was dominant for a bit there. And then Google just came away and took it. And, look at the market share of Android versus iOS today. It's not even remotely close. So, so it's something to keep in mind. And that doesn't mean ChatGPT's doomed or like that company can never do well. Even if they get beat by Gemini, they could still have a huge market. Like Apple wasn't doomed. Just because Android took the massive market share in mobile didn't mean Apple was doomed as a company. So that's just something to keep in mind here.
Of their demise may have been quite exaggerated. What is it? Number one, Nano Banana? That's the one that's number one?
Yeah, it's the number one. It pushed Gemini past ChatGPT.
Right.
So that's really driving this. What I think you're going to hear more talk about in a year or two, though, is their video app, VO3. Now, you can only produce about 8 seconds of videos today, but this is the worst it's ever going to be. And so that's going to give them a massive edge, especially given they've got all that YouTube content to train on for free, whereas other people like OpenAI, they don't have free user-generated content that they can train on. So
yeah, now I don't know if you're an investor in the private markets, but it does take me to OpenAI for a moment. Not one of the names we mentioned, obviously doesn't trade publicly. But do you think at $500 billion perhaps that is overvalued given the competition you see being potentially won or if not joined very significantly by the likes of Alphabet?
Yeah, I think OpenAI is going to have a lot of problems when you look out 5 years from now for two reasons. Number one, the guys they're competing with, which is Microsoft, Google, AWS. They've got massive cash flow generating businesses in other areas that they can use to fund all of their AI development. With OpenAI, they don't have any of that. They're planning on burning $115 billion in cash through calendar 29. I don't think they're going to be able to burn that because I think the private markets are going to start shutting them down as we get out a few years from now. But the biggest issue is the winners are going to be the ones that got massive troves of free data they can train on. So who are those companies? ByteDance has TikTok, so all that data. Meta's got Instagram and Facebook itself. Google's obviously got YouTube. And then on the corporate side, everybody has a Oracle database, right? Over 60% of S&P 500 companies. So they're in great shape. And then Microsoft with Office has got a great stronghold as well. So those are the dominant companies, I think, when you look out 3 to 5 years from now, either because they've got tons of consumer data, so they're going to dominate in consumer AI, or you're hammerlock with corporations, so you're going to dominate in corporate-focused AI. And I think
okay, what Dan Niles just laid out there, listen, man, perfect storm. The perfect storm, which, by the way, listen, it's raining in Vegas here today. And that never happens. You might say, what's the big deal, man? It never rains in Vegas. My kids were so happy they were out dancing in the rain. Holy smokes, this ain't no jokers. But in all seriousness, listen, you want to talk about the perfect storm? Let me take you through the perfect storm. Imagine over the next year or two, right? Google starts to really take a lot of market share away from ChatGPT. And then ChatGPT is also facing all these competitors from X, from AWS, from a bunch of different sides here, okay? So all of a sudden it starts to look like OpenAI starts to look much more vulnerable where, I feel like over the past year or two, people kind of just chalked OpenAI as they're the big winner, chicken dinner. They're going to dominate everything AI related, right? So all of a sudden, let's say a year or two from now, you have a lot of questions. Let's say simultaneously, the market's having a lot of trouble. Let's say, we're going through a correction or a crash in the market. What Dan Niles laid out there, about investors shutting down OpenAI for investing big money into? Yep, he's 100% right. That could happen. That could very well happen. If the credit market sees up a little bit, and then you have a lot of questions about market share and OpenAI's competitiveness, oh yeah.
That aren't in either of those two buckets are going to have a huge problem.
I just to follow up on that, a lot of the training, models have been run, inference is obviously one of the key things, not to mention products. ChatGPT has been incredibly successful on the consumer basis. Some would argue they've already won to a certain extent, and then obviously moving in the enterprise. Many would say it's way too early to write them off in terms of all the different things they can move into, by the way, whether it's social and competing with Meta and on from there, Dan.
Well, that's true, but how are you going to fund it? You got to
raise a lot of money. You got to raise a lot of money. Now, their revenue growth is pretty significant. Let's not forget. They're losing a lot of money, but they are, triple-digit revenue growth right now.
Absolutely. But we've seen in the past with technology companies, the guy who's out first isn't necessarily the guy that wins, right? I think we all remember Netscape. We remember Yahoo. You can go back to cell phones, right? Nokia had dominant market share at 40% of the total market.
True.
You had Motorola then. You had RIM, BlackBerry, the Crackberry. Remember that?
Oh, yes.
You had MySpace and social media. And so I think I'm a big believer that the market's not going up 20% a year forever, right? I lived through 01, 02. At a certain point, if you look back over the past 3 years, including this year, you will have had from the big five companies, which is the three hyperscalers plus Meta and Oracle, they will have spent $825 billion in CapEx over the past 3 years. The industry probably about $1.2 trillion. It's not too early to say, hey, am I getting any return on that? And if you look at the poster child for that, which you could argue was Salesforce with this whole agentic AI, the stock was at an all-time record high in 2024. It hit a 52-week low in August because, as that MIT study said, 95% of the companies that have been investing into AI have seen 0% return. It's probably an exaggeration to some degree, but at a certain point, the market's not going to say, much like in 1999 when it said every company that said they had an internet business is going to win. People are going to start saying, all right, who are the names that are going to start to dominate? And it's not going to be 10 names. Right. So the question is, where are you in that process? And I think we're getting closer to that as we get into 2026.
Fair thoughts around Dan Niles' comments there. So what does that mean for Google stock overall? I would say for Google stock, it means, you got to understand Google right now is trading at a forward P of probably 24 to 25 is my guess. Let's pull up good old Google McDougal here. Okay. So, yeah, trading at a forward P of 24 roughly. Now, keep in mind, Google comes in and beats their numbers a lot, so don't be surprised if that's actually like a 23 or 22 right now, forward P, okay? Here's the thing with Google. You have a lot of room to potentially expand that forward PE. If you become more confident that the AI future is their AI future, if you become more confident in Waymo and that's going to be the dominant robo-taxi network, because keep in mind, if we look out at Google in 2030, you got to understand this is potentially the most dominant company in the world with video, right? With YouTube. Likely still the most dominant company in the world by a large margin when it comes to search, with Google search, right? Still going to be by far and away the most dominant company in the world when it comes to mobile, right? With obviously Android. We know that. This is all in 2030. What company is the most dominant when it comes to robotaxi? I have to say, I think it's going to be Waymo. I think Waymo's set up the best out of everybody. So I think Waymo's still going to be dominating there, right? And there's debates. You could debate the other companies and things like that. That's fine. But I think Waymo's going to win it. And so you got the leader in robotaxi opportunity as well. And then you could say, if they're dominating AI, oh my gosh, like those are 5 of the biggest categories you could possibly imagine. There's a decent probability Google could dominate all 5. You got a company like that dominating all 5, we're probably headed to a $10 trillion market cap long term, or at least $5 trillion market cap. Let's call it somewhere between 5 and 10 trillion if they really dominate all 5 categories. So you look at it at $3 trillion today, and to be honest, the stock's not expensive. to be honest, the stock is cheap. And if they really do win robotaxi, if they really do win the opportunity of AI, I mean, we're going to be talking about a company that's easily a $5 or $10 trillion market cap. And we could be looking at it right now at a $3 trillion and be like, dang, Google stock was so cheap back then. Like, yeah, it had made a big move, but we didn't realize how cheap it was at the time. And the more you start looking at it, the more you're like, dang, like this is actually realistic, man, when you start to track all these things. All right, let's talk about some stocks that are some opportunities out there that I really love right now. Right? So this is my potential buys watch list here. This list is filled up of Whirlpool, Hershey's, Nike, Amazon, Starbucks, LVMH, Target, CRM, Google McDougal, Cake, Adobe, RH, Cava, Snowflake, Bath and Body Works, The Planet, SoFi, Win. Where do my eyes go when I say, man, that stock's just easy money over the next few years? My eyes go directly to Amazon. My eyes go directly to CRM, Salesforce. My eyes go directly to Google McDougal. My eyes go directly to Adobe. And that's really it. For like, oh, that's easy money the next 3-5 years. Those are the only ones that really my eyes go to. Where do my eyes go to that I'm like, dang, that might be a banger stock over the next 1 to 2 years if some things kind of go their way? My eyes go to Whirlpool. My eyes go, if housing turns in 26 and then the tariffs get to stay on, I think that could help Whirlpool immensely against their competition. Plus you get a housing rebound. I'm like, dang, that one could be a banger in 26, 27. But they need some things to go their way. Nike's another one that I'm like, dang, that stock could be a banger in the next year or two with all the cost-cutting measures they've done over the 2024 and 2025 and the turnaround of that business model. I think we're going to see revenues increasing, earnings per share increasing, margins increasing. It's going to be a fun stock, I think, over the next couple of years here. Starbucks, questionable still. Starbucks is LVMH, a little bit questionable as well. Target, if they could get their same store sales back in the right direction in 26, that stock could be a banger over the next year or two. So that one's a potential. Cake, definitely looking good as far as Cake goes. I think Cake should have a big increase in how many Flower Childs and North Italias are opening in 26 and 27. And I think that could cause a very nice kind of actually like hype cycle in regards to Cake and some major revenue increases in 26 and 27 for the company and in future years as well. So that one sets up very well, 26, 27. RH could be, it's just been disappointing what they did with their balance sheet, so it's a risky stock. It's one of the riskiest here. Cava, if that one keeps dropping, then we're really in business there. Snowflake definitely has an opportunity. Their revenue growth has been very impressive recently. Bath and Body Works, yeah, that one actually looks pretty interesting to me. So that one's valuation is just down in the dumpers right now. We pull up a Bath and Body Works here. Bath and Body Works. Let's check the forward P on this one. 7 forward P on Bath and Body Works. But the interesting thing about Bath and Body Works is I do not believe this is going to be a business in decline. I just don't believe it. I believe Bath & Body Works is a strong company that their revenues will be going up in future years. And is it going to be going up at a fast clip? No. I think Bath & Body Works is a type of company you should expect to grow their revenues 3% to 10% a year, right? If they're having a banger year, maybe they grow their revenues like 10%. If, they're having a little bit of a slower year, maybe it's like a 3% revenue growth. That's kind of the way I would look at Bath & Body Works. But, if this is really a company that can continually grow 3 to 10%, trading at 4PS7, I mean, you could say it's actually a pretty good opportunity here. So I don't like their balance sheet at Bath & Body Works. That's kind of the one issue I really have with this company is their balance sheet. Dividend yield of this one, 3% plus, and a dividend payout ratio that's pretty low. So they could up that dividend significantly over future years. Do keep in mind their debt load they do have in with this company. If interest rates are going lower over this next bit of time, that could actually set them up very well over the next few years. And then, we could be talking about a stock in a year or two that's $50, right? So, I like Bath & Body Works here. If we run some projections on Bath & Body Works here, right? Let's run a base case on Bath & Body Works. Okay, so let's say on average they grow revenues 5% a year. Not a crazy number. It's decent, right? And they grow their net income a little faster clip. Let's say about a 7% clip for net income growth. Now, 5 to 7%, I think a fair P ratio for a stock that's growing at that for retail is kind of in the 12 to 17 range. Okay. And let's see what type of CAGR we get on this one over the next few years. I mean, that's dang attractive. We're talking about a compound annual growth rate on the low end of around 20%, on the high end of 30%. When I run a base case and I'm getting that CAGR around 20%, that's hard for me not to buy that stock. So, and this is a simple business model. It's not like this is some rocket science business model. Like, I never heard of selling soaps and candles and lotions before. So, Bath and Body Works might be interesting as a buy, but we'll see. The plan, obviously, that one's just one that has insane upside potential, but also comes with a lot of risk. SoFi's been a banger of a stock, tremendous, but it definitely comes with risk in terms of, the valuation's gotten a lot richer, but those growth rates are ridiculous at SoFi. And Wynn Resorts looks pretty compelling as well. But that's kind of where my eyes go and kind of the stocks I think. Like, I'm just like Amazon, if I just think about stocks that are just easy money the next 5 years, that are going to be significantly higher than where they're at now, Amazon's one of those. Amazon's one of those, by the way. I just want to save my base case here for Bath and Body Works. Bath and Body Works. I'll come back to that one. I'll work on a bull case and a bear case for Bath and Body Works. So I just want to save that. I like to save all my projections now so I can come back to them in the future on 1000xstocks.com. But yeah, Google, same exact thing. Adobe, same exact thing. And CRM, same exact thing. Like, CRM's really attractive here. I think I have my CRM numbers saved here. Let's take a peek. Do I have CRM? No, I don't have CRM. There I are, Salesforce. Let's pull up Salesforce. Let's see my cases here for this one. So with Salesforce, my base case has about 13 to 18% compound annual growth rate for Salesforce, but I might be going a little low with my numbers. So I honestly think I need to move my bull case up a little bit. The more I've researched Salesforce, I think my bull case is too low, and I think my base case is too low at 10%. My bear case, I'm going to keep it there at 6%, but honestly, I need to move these numbers up. Let's do it right now. I believe on a bull case scenario for Salesforce, they do about 14% on that top line, and I believe they do about 22% on the bottom line here. And if they do 14%, 22%, you can probably push this P ratio to about 29 on the low end here. And we'll push it to about 34 on the high end. Now, 34 is actually still low if they're really growing that bottom line 22%, right? But this will give you a little bit of an illustration. And then here, I have this one moving up to 12% on the base case, and then I have them doing 20% on the bottom line here. So, and this is honestly, I think, pretty realistic for Salesforce to hit these sorts of numbers. And we'll do about a 27 to 32 on the P here, which, once again, if you're growing 20% on the bottom line, a 27 to 32 PE is not high. It is not high at all. For a company that could grow at those sorts of growth rates, right? In my bear case, I'm going to keep it there at 6% and 10%. So, that's where Salesforce is just very, very attractive. So I'm going to save that over Salesforce again. But yeah, that one's very attractive. And then Adobe, do I have my Adobe numbers here? I do have Adobe numbers. Let's load my data for Adobe. This is another one that's extremely conservative. I honestly probably need to move my numbers up a little bit. Like, my bull case, the thing with my bull case for Adobe has them growing at a slower clip than what they're growing at right now. That's for a bull case. I think I went probably too conservative here with Adobe. But you see here with Adobe, we're talking about, even with this insanely conservative, a major deceleration of growth, we're talking about 13% low end, 19% high end, right? And do keep in mind they should be able to buy back a ton of shares, which should help their earnings per share, which arguably makes these compounding annual growth rates a little higher than where they're at. So just keep that in mind. That's where, if you really want to go crazy with your projections and you really want to run it out, that's where you go to something like advanced projections. And you run all this different stuff like, what if they're doing a big share buyback and they decrease their shares by 2% a year, 4% a year, 6% a year, or something like that, right? And then you get a very different kind of numbers there and whatnot. But anyways, all right, guys, that wraps up today's video. I appreciate y'all for joining me. Thanks so much for being subscribed to the channel. If you want to see more of my videos, make sure you're subscribed in the future. Additionally, if you want to join my Patreon, see stocks I'm buying and selling each week, how I run a portfolio, all that good stuff, pinned comment down there will be the second pinned comment. If you want to join my private stock group, get access to 1000xstocks.com, my private Discord chat, all that good stuff. That will be the first pinned comment down there. You click on that, fill the form, and apply to join us in there. Much love and have a great day.